Hey everybody, it's Christy Garnhart. I'm with RE/MAX in Freeport, Illinois, Golden Girls team, and I'm here with Travis. Travis is a lender in the area. Travis, do you want to do an introduction and tell us what company you work for?
Yeah, absolutely. How's it going, everyone? My name is Travis Drinkwine. I'm a local mortgage expert here in Rockford, Illinois, and South Beloit area. I work with Guaranteed Rate. I've been doing mortgages for about 5 years now. Have a vast knowledge of assistance programs and first-time home buyers. So happy to help out any way I can.
Awesome. So I think the huge question that we get from a lot of folks right now is interest rates. And I know that you don't have control over any of that, but can you give folks a little idea on how interest rates are determined?
Yeah, absolutely. So the biggest things with interest rates is understanding your interest rate to your APR, right? APR stands for annual percentage rate. As we all know, interest rates fluctuate with the market, right? But understanding kind of the logic behind how it fluctuates and why is important. The biggest thing that goes into determining what interest rate you can qualify for when purchasing a home are 3 factors, I like to say. One is going to be the investors or the lender themselves, how they negotiate their margins for profit and how they have pre-negotiated these interest rates with their investors on the secondary market. As I said, that market is determined much on our economic state of things as a nation here. So that can fluctuate, but ultimately that will determine where those margins stand and what interest rates they're allowed to issue, if you will. The next thing is going to be the home itself, right? Or the loan structure. That can be determined by many things, right? Are we going to be doing a VA loan, an FHA loan, conventional, USDA? Is there going to be a down payment? Are you going to need down payment assistance? Is this a primary residence or is it an investment? All these factors can also determine what your interest rate is going to turn out to be. And the last thing is going to be, of course, borrower specific. So that's going to be dependent on what your personal qualification is going to be. So things like your debt to income ratio, your loan to value, what's your credit score, what's your credit history, do you have any assets or reserves, do you need a down payment or can you bring the down payment as a gift or have it as yourself? All those factors can determine exactly what your interest rate is going to shake out to, but that's what I'm here for. I can help educate and provide that insight for you when you start that process.